Good morning, traders. This is Tom Willis from Opteck. Today it is the 22nd of October 2013. Today we've got a very special day. As you know, some of you, you're missing this information. We had a very, very difficult situation in the United States for the last 2 or 3 weeks, and we had several announcements that we were supposed to receive from the beginning of the month they were postponed to today's session. As you can see from the announcement, coming up an announcement on the Canadian dollar, while at the same time we've got an announcement on the non-farm payroll and the unemployment rate in the United States. Because of that combination, both announcement on the Canadian and the US dollar, we've got a very, very special condition when we can trade a specific trade with a lot of confidence. Now, let me describe the situation that I'm expecting to see, and we will follow that indication. A Canadian dollar and the US dollar announcements. If one of the announcement will be red and the other one will be green, then we've got a specific direction for a specific trade. Now, again, let me describe a specific scenario. Let's say that the Canadian dollar will receive bad announcement over here. We will receive red number at the actual number that will be expressed to the public. And when the US dollar will be announced, the non-farm payroll or unemployment rate, or both of them, then we will receive good indication, meaning a green number. Then we will know that the specific direction for the dollar in front of the Canadian dollar will be an uptrend, and vice versa. If we will see that the Canadian dollar will receive good announcement and the US dollar will receive bad announcement, then we know that the direction of the Canadian dollar in front of the US dollar, meaning dollar versus the Canadian dollar, will be a put option. Now, it's a very unique specific condition because both announcements will be exposed to the public at the same time, at 1:30 GMT time. So that's a perfect condition to trade on, but it's not the only issue. As I said at the beginning, the announcement regarding the unemployment rate and the non-farm payroll was delayed because of the condition in the United States until today. And this is why it's so important for us, because up until this trading session we had a problematic market, and I've talked about it again and again. I said that the market is it's expressing a very difficult confidence issue. We can see that traders are not involved in trading. They don't move the market a lot. We can see that the liquidity is very low. Everything together is just an expression of the same issue. And today we're expecting this issue to resolve the idea of confidence in the market, and because of that we're expecting a lot of liquidity driven into the market because of the announcements regarding the NFP and regarding the combination between the Canadian dollar and the US dollar at the same time. Let's see what we've got later on. As you can see, nothing really important. Maybe some additional liquidity at 2 p.m. But again, I want to go back to the idea of today's announcements. Once we will have liquidity, it doesn't mean that the liquidity will get into the market for 15 minutes or half an hour. It means that the liquidity will add confidence, and because of that, traders that won't get in once the announcement will be delivered will get in a bit after that. And because of that, we've got a long-term expression of liquidity for the next hours after the announcement, or even days, because of changes that we're expecting to see on the chart. Now, just to go over that again, I want to talk about our expectation. Again, let's take a specific condition. We're talking about the US dollar in front of the Canadian dollar, a call option meaning a stronger dollar, a put option meaning a stronger Canadian dollar. So I'm expecting the market to form a choppy overlapping movement, a corrective pattern formation, because this formation, again, before the announcement, this formation is expressing a difficulty, and we're expecting to see difficulty before the announcement will be expressed. But once the announcement will be expressed, That's what I'm doing every time. I'm just closing the limits. I'm just indicating the limits between the uptrend potential and the downtrend potential. Now, let's take two scenarios. The first one, that the dollar is receiving good announcement and the Canadian dollar receives bad announcement. If the dollar will receive good announcement, then we'll have a spike toward a stronger dollar in the market in front of the Canadian. And after that, we will have a bit of pullback. This is the expression of traders pulling the profits out of the market. Okay? And the best entrance point will be over here because we're still expecting the market to continue its movement. Now again, the other way around, if the Canadian dollar will have a good announcement and the US dollar will have a bad announcement, then we're expecting to see the same scenario occurring down and then a pullback in a choppy overlapping movement, and that's another good entrance point for a continuance of a downtrend in this case. Okay, and in terms of announcement, I can analyze the market and give you a general assumption regarding the potential according to structure, according to the second psychology webinar. But nothing will be able to indicate the movement on the chart accurately as we need it to. So I'm taking two scenarios in count, and I think that we will have a specific scenario occurring on the chart once we will have that announcement. Now, if both currencies, the dollar and the Canadian dollar, both will receive good announcements or bad announcement, then forget about trading this asset. Try to look for trading the currencies in front of other currencies. For example, if they will receive bad announcement, then I will look for the strongest currency, and I will express the weakness of the dollar and the Canadian dollar in front of it. And if we will receive good announcements on both of them, then I'm expecting to express this specific strength in front of the weakest currencies in the market. Just an amazing condition because of the stress that we've got in the market right now, because of lack of liquidity that we had until now. This is why I'm expecting the market to explode. And that's a great scenario for you traders to join movements as they will begin with a spike, and after that we will see the market forming a corrective pattern, and then we'll be able to join the market as our strategy is indicating. Let's go to the chart and see what is our expectation according to the edit wave analysis. Okay, so again, first of all, as I'm always doing, and I do expect you to do that as well when you open chart station, I do expect you to look for strength and weakness, who's stronger and who's weaker. It's the obvious logical thing to do. We can say that generally the market is forming a good potential for liquidity. We can say that the Australian dollar, the euro, again, I'm just fixing the currencies according to the strength indication. Okay. So we can say that the weakest currencies at the moment are the Japanese yen and the New Zealand. And we can say that the strongest currencies are the Canadian dollar, the euro, the US dollar, and the Australian dollar. Again, we've got approximately 7 digits or 6 digits between the strongest currency and the weakest currency. It's a bit limiting, but I do expect to see an additional liquidity, and I explained why, and that will resolve the idea of liquidity. You'll be able to have an enormous amount of potential trades according to our strategy. The strategy needs substantial liquidity to express good potential trades. It's only logical. We will be able to have a lot of trades according to our strategy once the market will regain its liquidity, regain its confidence. So again, Canadian dollar, euro, US dollar, and Australian dollar, they express good amount of liquidity, good amount of strength, and the New Zealand is the weakest currency at the moment. After that, the Japanese yen. The pound is lagging behind, and the Swiss franc is approximately at the middle. I wouldn't participate in trades in front of the Swiss franc for today until we will receive an additional liquidity to the market. So let's go and see what we've got according to that potential. Now, as I'm doing always, let's open, just for the example, let's open the euro in front of the New Zealand. Basically, I did the same thing yesterday with the same currencies, and it seems like the market is really waiting for something to occur. Really waiting for something to add liquidity, because we can't see a lot of changes occurring on the charts. If we had the same currencies yesterday, stronger and weaker. We had an amazing trade over here. As you can see, good pullback, stochastic at the bottom, RSI at the top. An amazing trade, a very clean image of our strategy. Again, only because this is a combination between the strongest currency, among the strongest currencies, the euro, and the New Zealand, which express weakness from the beginning of the week. So that's a logical analysis. You can see how it's taking form very cleanly, and you can see over here as well a good trade that we had. Again, a trade like that for half an hour is profitable. We have a trend line across and an uptrend for half an hour. That's the image that we're looking for. Let's again go and analyze other charts, and I will analyze specifically for today because of the non-farm payroll. I will analyze the dollar index, presenting a potential for the announcement itself. I will try to assume what will be the effect of the announcement according to structure, according to cycles. Okay. So first of all, we will go over the on-demand instruments. As you can see, we do have movements in the market. We said that the Australian dollar is stronger than the New Zealand. It's among the strongest currency, and the New Zealand is among the weakest. And because of that, we can see this long movement of an uptrend. Again, we don't have a specific indication for a trade over here. We will need to wait for a pullback and then catch this movement for an uptrend. Not right now, of course. Australian dollar versus the US dollar. I said that I'm expecting it to gain strength, but we saw that the Australian dollar and the US dollar are presenting approximately the same strength. So I would leave this asset alone for today until the announcement. And beside the potential on the Australian dollar versus the New Zealand, we had nothing over there. Again, here we've got nothing and nothing. I want you to pay attention closely to this structure over here. Again, as I said, for the last several days, after we had a very nice amount of liquidity for the last several days, the market is just fluctuating sideways. Now, I do not advise you to trade with this specific strategy, but if you're familiar with channeling, if you're familiar with triangles, then you know that the market should bounce between the limits of the triangle, backward and forward. So in this case, we had a good potential for a downtrend, although the RSI is fluctuating around the 50 level, which is a very difficult area, indicating that there's a very low amount of liquidity. And we can see that on the chart. No reason to look at the RSI for that, but the RSI is an additional indication for that lack of liquidity expression. So as we can see, the market is just fluctuating, waiting for the announcement to be delivered. At the moment, the euro and the US dollar are presenting approximately the same strength. Because of that, it wouldn't be a logical trade to participate in at the moment. I do expect this chart to change substantially after we will receive the announcement. Pound versus the US dollar, nothing over here at the moment. Let's proceed. Okay, we had a good one over here, dollar versus Japanese yen, but at the moment nothing to indicate. You can see that the market is just moving along a sideways movement. Okay, let's go to the indices and see what is our expectation from the dollar versus itself, dollar index. In this case, what I'll do, I'll go to a larger time frame. I really want to analyze the potential because I'm expecting the market to change the expression of the dollar substantially, with a lot of liquidity and a lot of potential for other trades. Um, just look at the larger image. Okay, first of all, I think that the market is moving toward an enormous crisis, not something that we will have right now, but I think that 2014 will be a very difficult trading year for the market. Again, um, not on our perspective. I do expect to see a lot of liquidity, but against the market, a stronger dollar in the market and weaker other markets, Japanese yen, euro, pound. I'm expecting them to lose a lot of strength for 2014. Right now, we can't see a logical expression of movement for that direction, but we can say that we've got a small movement over here that looks like an impulse movement climbing up and an A, B, and C dropping down, which means that we've got a nice potential for an uptrend over here. But let's go and see on a lower time frame what is our expectation for this trading session. Let me show you another thing, going to show you what was the expression of announcements regarding the depth issue, regarding the actions of the federal bank in the United States. Over here, we had an announcement. Draghi said that they're going to lower the amount of support to the market. They're going to lower the amount of support. He didn't state from what rate to what rate, but he said that they're going to lower the support, and because of that, we saw that the market climbed higher. As you can see in here, he said that unfortunately they received a bad announcement regarding the unemployment rate and other issues, and because of that, they will delay the support to the market, and we can see that the dollar collapsed from that moment and beyond. Now, this expression is an enormous expression in terms of value. You can see that the dollar, the average dollar in the market, collapsed from 84 to 79. Okay, it's approximately 5%, even a bit more than that. So understand that announcements like today will cause the market to change and will cause a long-term effect. As you can see, we're looking at a 4-hour chart. I'm talking about movements that began and went on for something like 2 weeks in this case, and in this case, July the 10th, and until now we can see a continuance of the same movement. Let's say that it was until here, August the 20th, a month and 10 days. So a beginning of a move today, because of today's announcement, will have an effect for a long-term cycle, and that's a great advantage that we've got today, looking for a potential according to these announcements. Now, let's have a closer look on the current market situation. So we had, again, I'm going back to the idea of the Elliott wave analysis. We had a general downtrend over here. I can call that a 1, a 2, a 3, a 4, and a 5. We've got a 5 move dropping down, impulse movement. We've got a 1 dropping down, and we've got a choppy overlapping movement climbing up. That's an A, a B, and a C. Now, when I'm doing that, I'm using the volume indicators at the bottom. The largest volume, as you can see, the largest bottom over here is indicating the third wave, and the two peaks that climb after the downtrend, they are the A, the B, and the C. So this is why I've indicated it as an A, a B, and a C that climbs up. We're expecting to see an additional downtrend movement and additional weakness on behalf of the US dollar. Again, according to the 8-wave analysis, we should receive bad announcement for the US dollar. I do take the information with the considerable risk management, and it's a potential for a weaker dollar in the market expressed from the announcements. Um, it's a potential, and we will see, and that's the important issue. Once you analyze the market, you cannot go blindly after a specific plan. You need to make a plan. You need to react according to your analysis, but you cannot react as an oracle. You can't predict the market. You can attend to a specific potential. Attend to a specific potential according to the logical structure. And that's exactly what I'm doing over here. My assumption over here, because we had a liquidized movement, an impulse movement dropping down, and we had a corrective pattern climbing up, and we had another 1, 2, 3, 4, 5 on a lower cycle. Again, let's go to a lower time frame. We will be able to count this downtrend movement in a more accurate reaction. As you can see, again, I will indicate that you see a very large volume over here, meaning that this is the third wave, and this is why I can count it as 1, 2, 3, 4, 5, meaning an impulse movement dropping down, and we've got a choppy overlapping movement over here. Again, two peaks, a 1 and a 2, indicating the A wave, the B wave, and the C wave. And because of that, I'm expecting the dollar to lose strength today. Again, it is a good plan. Okay, it's a plan, something that we can attend to, a potential. So I wouldn't draw this line yet because I think that we've got a bit more information coming up, and we will have a bit more choppy overlapping movement. But before the announcement, I will place a trend line below the corrective pattern. A cross beyond that will indicate a substantial confidence for a weaker dollar in the market, and then I'll be more secure with my assumption. This is it for today. We had a very long session, not as usual, but we've got a very special day today. I do want to say that we've got a special day in terms of investments here in Opteck as well. If you want to hear more details, you can contact your broker. And I wish you all the best with your trades. It has a great potential because all of a sudden we will have an additional liquidity, and that's exactly what we were waiting for. That is it for today. All the best with your trades. Pleasant day, and bye bye.